Hi everyone, I'm Gorge from DDP Property. Welcome back to our channel. Today we're exploring a topic that's been making waves in the real estate world: the beauty of regional markets versus capital cities in Australia. Whether you're an experienced property investor or just starting your journey, there's going to be something here for you. So let's dive in and discover what makes both regional markets and capital cities unique and why each might be the right fit for you. In Australia, property markets in major capital cities like Sydney and Melbourne have long been the focus, but recently, regional markets have emerged as powerful contenders, offering unique opportunities for growth, lifestyle, and investment. Today, we'll take a closer look at the key differences between these two types of markets and why you might explore one over the other. Let's start with the capital cities. Places like Sydney, Melbourne, and Brisbane are often considered the epicenters of Australian real estate. Why? Because they're bustling hubs of economic activity, culture, and infrastructure. These cities are home to some of the country's most valuable properties and are constantly evolving with new developments, transport links, and amenities which are popping up all the time. Investing in capital cities offers the potential for strong, steady returns, especially in well-established suburbs. These areas tend to attract a diverse population, including professionals, families, and international buyers, which can actually drive demand and property values. Plus, with the concentration of jobs, education, and healthcare facilities, there's always a demand for housing. However, the competition in these markets can be fierce and entry prices are often higher. For investors, this can mean a larger initial outlay and sometimes lower rental yields compared to those regional areas. But for those seeking long-term capital growth, capital cities are still a strong bet. Now let's talk about regional markets. Over the past few years, we've seen a significant shift with more Australians looking to regional areas for their next property investment. So what's actually driving this trend? Regional markets offer something that capital cities often can't: affordability and a laid-back lifestyle. With the rise of remote work, many people are no longer tied to the city for their jobs, allowing them to seek out the space, tranquility, and community that regional areas provide. This has led to a surge in demand for properties in these regions, and in turn, property values have been rising steadily. For investors, regional markets can offer higher rental yields and lower entry costs. Plus, the potential for growth in these areas is increasingly attractive as more people make the tree change or sea change. But it's important to note that regional markets can be a little more volatile, and factors like local employment opportunities and infrastructure development play a huge role in their long-term success. So how do you choose between investing in a capital city or a regional market? Honestly, it really comes down to your goals and your circumstances. If you're looking for stable long-term capital growth with access to all the amenities a big city offers, capital cities might be your go-to. But if you're after affordability, higher rental yields, and a growing market with potential, then regional areas are definitely worth considering. In the end, both capital cities and regional markets have their unique advantages. A balanced property portfolio might actually include a mixture of both, depending on what suits your investment strategy best. Thank you for joining me today as we explored the beauty of regional markets versus capital cities in Australia. If you did find this video helpful, don't forget to like, share, and subscribe for more insights from DDP Property. And as always, if you've got any questions or you need advice on your next property move, feel free to reach out anytime. Until next time, happy investing.